Everybody. Jeff, you
Hey,
want to do?
I'm
Go
gonna
ahead.
kick us off,
Hey,
Rahul.
Jeff. Hey, I'll
Hello,
just
it's a
by the
good
way get
meeting.
out of here.
All right. I'm gonna go ahead and kind of introduce everybody. Welcome to the show. Hopefully you're doing well. Hopefully you're healthy. You're looking great. I can see that. In any case, I'm gonna go ahead and kick us off. If you're watching us and you have questions, if you can go to webinar, there's a little questions panel.
From fast
Hold
to
on,
family friendly.
just a second.
We have arrived for that.
The YouTube is now going. If you have questions as we go, just ask. We can see them. We will make sure we answer them as best as we can. If you're on YouTube, just ask us in the chat. Okay, that's all. If you are watching us on YouTube, like and subscribe. It helps a great deal. I'd appreciate it. And Greg told me once that you get good karma out of it. So to kick us off, I'm going to go ahead and read the legal disclaimer. Today's demonstration is designed to instruct you on using the Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse a purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy said security. In any case, I want to say thank you for coming. Really appreciate you having me here. Our guest today, you can see him. I'm not sure where he is in relationship to me on your view, but our guest today is Rahul Aurora. Rahul's been a great business partner of Metastock for at least 15 or 20 years. I think we did some math last time. I can't remember what that math was, but he's a great guy. What I really like about Rahul and his presentations is he really kind of shows a lot of the trades that he's been in and kind of the ones that he recommends in the room, and is very, very thorough in terms of kind of just bringing receipts. And I like that. So without further ado, Rahul, let's go ahead and make you the presenter. I think you can just share in the new interface. I don't think I have to do anything except for stop sharing my screen. So
Let's see. Are you able to see my screen that has...
yeah, the trade journal.
now it's got the victory fundamentals?
I can see that. Yeah.
Yes?
Yes, sir.
Let me close that off. So we've got the trade journal in the background. We've got the victory. You see how long I've been working with Jeff? He's brainwashed me.
Yeah. You started right. I think I might have started that. I don't think I said victory today yet, though.
Yeah, I don't think it'll be long before you do. Victory's been a great indicator. And you're now going to be working on Victory 3, so that'll be great as well.
Well, you are live. I can hear you. This is a good time for me to get out of the way. Go. Your turn. Start.
Jeff, thank you. Jeff, I'll go for about 50 minutes and I'll let you let the folks know how they can get access to the system. Does that work for you?
Sounds great to me. Yes.
I know Jeff already mentioned it, but just a reminder that what we're doing here is not trade recommendations or advice. We're showing you what we're doing by using technical analysis on the Metastock platform. And so please take it as such. Before we get into this, as Jeff mentioned, that's my name. I created the Velocity system. A little bit about my history. I'm a CPA by background, and I left that field about 20 years ago because I just felt like I wasn't taking enough advantage of my winning personality at the time. And I was 29, and I remember speaking with one of the accounting partners there, and he said, if you're going to make a drastic change in your career path, now is the time to do it. This was before kids, before mortgages, all that stuff. So I did make that change. I went into the real estate business for a bit, and then I met my mentor, Vince Vora, around 2011 or so. And prior to joining the accounting firm in '98, I've been trading lightly, a little bit here and there. Trading at the time was very, very different than what it is today. The cost of trading was a deterrent. You could not trade frequently because the cost was just too high. But if you recall, back around 97, 98, you started to see this tidal wave of low-cost self-serve electronic brokerages like E-Trade TD Ameritrade. Daytech was one. I think they popularized the $8 trade. I may be mistaken in my memory here in terms of who offered the $8 trades, but it sort of democratized the trading arena. It wasn't just for the staff at JP Morgan and Goldman Sachs who could now trade frequently and speculate on things. The retail investor, the retail trader, I should say, was able now to participate in that. And being a young 24-year-old kid, you have all the confidence in the world. And that confidence is good, and it can sometimes lead to overconfidence, which in the markets is never, and I mean never, ever, ever good. And it's overconfidence that takes out a lot of traders. You'll have a good trade, 2, 3, maybe 4 in a row. You'll get overconfidence, and next thing you know, you're now lower than where you started before your first winning trade. So during that time, it was 1997, 98. So, the staff and I, my colleagues and I, we didn't have anything to do. We were just new hires at the firm. What do we do during the day? We're looking at eBay moving 30 points in a day. We're looking at Amazon moving 25 points in a day. Seems like easy money. And then I discovered options, which seems like even easier money. The problem with options is if you don't know what you're doing, you are going to get blown up. And I managed to turn $10,000 into $1,500 very, very quickly because I thought I knew what I was doing, and I had no idea. I had no business trading options. And that's when I said I'm going to commit myself to learning as much as I can about it. Now, coming from a CPA background certainly was a help because I knew the fundamentals of what makes a company tick. So we'd go into these companies when we were doing audits for them and find out what it is that's making this company tick. What do the ratios mean? What does year over year growth mean? Where are the bodies buried? And bodies are generally buried in the notes to the financial statements, if you didn't know that. So if you're ever interested in finding out, and you're seeing a lot of this now, you're seeing a lot of this in the AI field where you're seeing a lot of this circular accounting that OpenAI buys something from NVIDIA, and then NVIDIA uses that to invest in Oracle, and Oracle goes back and buys chips from NVIDIA. If you look at the notes to the financial statements, and this is earnings season, a perfect time to do all of this. If you look at the notes to the financial statements, and now with the use of said OpenAI and ChatGPT, you can actually just copy some of those notes, or you can copy the entire area where the notes to the financial statements exist, put it into ChatGPT, and ask it to look through it through the lens of a forensic accountant, for instance, or through the lens of someone who's looking to invest in the company. That, again, we had the democratization of trading back in the late 90s, early 2000s with the cost being lower. Then we had Robinhood a few years ago saying, hey, no cost at all. Just tell us what you want to trade. We're going to sell your order flow and you don't have to pay anything. Now you're getting to an area where we have this tidal wave again of a system that can let you analyze things just like a professional trader would at a trade desk. So it may not be as powerful as what JP Morgan and Goldman Sachs has, but it is certainly leveling the playing field a little bit more. And I was watching some of the stuff from the recent Robinhood conference that they had. And they're really bringing out new things. They're now allowing shorting. They're going to be going to 24/5, not only equities trading, but also options trading. So they're really trying to bring a level playing field to this market. So it's an exciting time, but it's an exciting time only if you know what you're doing. And it's not a great time if you don't know what you're doing, because instead of it taking you 90 days to blow up, it can take you 9 days. So there's that old rule that 90% of traders lose 90% of their account in 90 days. With the way things are going now, you could probably shorten that distance down to 9 days if you're not careful. And we'll talk a lot about options in the session. My goal here is not to tell you how great I am, is not to tell you how well we've done. My goal here is to teach you the same system that we've used this year to generate these kind of trades here. So this is our trade journal that's available publicly. It's for our members only, but we made it available to everybody. The only thing that's different here versus what the members see is that the members will get the alerts on these trades well before we post them here on the spreadsheet. But as a former auditor, I encourage everyone to look at the sheet and challenge us, and we will show you every single trade that we've put on here through, this is our Microsoft Teams channel, and there's the most recent trade. It was on PATH. We've got Nokia, we've got CIFR, we've got CLF. These are all documented and time-stamped, and they all end up here so that we can track them. We did not have a losing trade until July of this year. So for the first 6 months of the year, we did not have a losing trade. And even that trade on CMG that turns out to be a losing trade, it was a trade on which we'd already taken profit earlier. So there's a June 30th profit take on, pardon me, on CMG, and then the remaining position was closed out for a loss. So this turned out to be almost a break-even trade. And we talk a lot about rolling out options, scaling out of positions. If you just have the comments, we're going to talk a lot about this in the next 38 minutes or so. So this is our sheet. If you'd like a copy to it, send us an email or let Jeff know. Email at info@tradingwins.com or let Jeff know and we can send you a copy of the spreadsheet here. Okay, getting back to where we are now. We've talked a lot about this. I don't like reading these things to you. You can read these things yourself. You know all these things. You're just looking for something that works for you and it works consistently. And if I go back to where we are here, I don't think anyone would deny that we have been very, very consistent this year. In fact, we had our market chat this morning and I had reached a personal high on my account for the year, and this is it here. Finally got over 100% from the beginning of the year, so there's the year to date, to today. And this is all from trading using this strategy here. It's not just a strategy, it's looking at what the risk reward is on an options trade. It's how to protect yourself when something goes in your favor. It's how to scale out of something when you've got a profit on it. We've highlighted all of the items that are over 100% profit. And for my personal account, the biggest contributor to my personal account this year, biggest contributors have been gold and silver and some of these leverage plays. This Mag 7 here is a 5x leveraged ETF that tracks the Mag 7. Generally, these ETFs, because of the volatility decay, are not meant to be long-term holds. But when the price dropped to about 1/6 of what it was, and all this talk of and this happened right around Liberation Day. Liberation Day was, I believe, the 4th of April, the 2nd of April. And you can see we ended up buying almost at the very low. QQQ5 was almost at the very low as well. This is now trading at around $2.30, and this is now trading at about $46. So so that's about a 600% gain, and you can see we've taken some profits along the way here. Most recent was on the 17th of September. Remember the purchase price, $6.95, ended up selling for $33.43. So these two trades here on QQQ5 and Mag 7, and we'll show you exactly why we got into those, have been very, very significant contributors to the overall portfolio this year for me and for the group. So getting back to where we are, second guessing entries is probably the most significant error other than poor money management. Second guessing entries is probably the most significant error that most traders make. Right behind that is not staying in a trade long enough. There's an old saying, we're going to talk about a lot of these old sayings. Trading isn't about how smart you are, it's about how much you can stomach. So it's not about a big brain, it's about a stronger stomach. You're going to get situations where your position runs up 20, 30, 40, 50% in a day, 2 days, 3 days. What do you do with it? If you're having trouble sleeping at night because your position has gone up and you're worried that it might come back, one, your money management is off. And two, you're clearly not structuring these trades in a way that makes you comfortable. And our job with the group, we've been doing this for 12 years, live with the group. We meet Mondays, Wednesdays, Fridays. Our job with the group isn't to say, hey, listen, this is what I'm doing, you should follow it. That's not what we do at all. I share this trade journal and there's complete transparency. We post everything. I share this trade journal to show the group, here's what I'm doing. But my risk tolerance, and if we go back to my previous career as a CPA, my risk tolerance is very low. I'm very conservative. That's what we're taught when we're going through the CPA process. And when you're doing accounting, when you're looking at financial statements, you're taught to be conservative. We have a lot of people in our group, some of them in their 70s and 80s, that have a much higher risk tolerance than I do, and I'm amazed by that I'm late 40s, early 50s, and my risk tolerance is a lot lower than theirs. So what we want to do here is we want to show you the basics, the fundamentals. We want to give you the structure, and then you take that structure and you fit it to your trading style. Your trading style is going to be very different, could be very different than mine. I'm not a day trader. I've tried it and I realize it's not for me. But for a lot of people, they like the excitement. They like the constant action. They like the idea that they need to make decisions quickly. All of those things, I just find very stressful. So I'm very happy looking at daily charts, weekly charts, monthly charts. If I'm looking at weekly and monthly, I'm looking at secular trends. I'm looking to see what the administration is doing in terms of rare earth stuff. So one of the big trades that we did not even post on here was a trade on UUUU. Now that was a personal trade that I took that I mentioned to the group. I said it could be high risk, it could be a big winner. So far it's been a big winner and I think it'll continue to be because that is one of the companies, American based, has relationships with the administration, has relationships with Australian concerns regarding rare earths. So for me, that is a high conviction play. I have options that are going out to 2027, and I'm thinking of rolling those out a little further to 2028. 2027 options on UUUU. If I take you to the chart, and we'll talk about this in detail. Okay, so on UUUU, if you look at this chart here, you'll see a couple of things. You'll see some letters and numbers, an alphanumeric kind of denomination. You'll see arrows and you'll see exit flags. This green arrow here that appears on the 28th of May, this is a signal that I would consider to go long with a couple of caveats. So let's go back here. Excuse me, and this comes in around, you know what, let's get the exact price. Close $5.32. If we go back here, we talked about getting the institutional edge in your hands. It's much easier now than it was in the 90s, even the early 2000s. Now, I have to warn you, the market is still controlled by big money. And unless you're trading with billions of dollars, you're not going to move the market. You're trying to ride that wave. You're trying to find, again, like I said, secular trends, and you are managing your trade. That's your advantage there. That when a trade starts to go against you, that you're out of that trade. So the goal here, and I'm going to show you on the charts, the goal here is If you lose one, lose one, lose one, but then you make 6 on the next trade, you're ending up positive. And that's exactly the way we've designed Velocity, is keep those losses very, very small. But when a trade runs, and if you've been long in this market since April of this year, you know that when a trade runs, you don't want to disturb it. You want to maybe harvest some profits along the way, but you don't. One of the most difficult things that you'll experience is the idea of seeing how far a trade can run. And most people don't have the stomach to see how far a trade can run. We want to show you, you don't even have to have that strong a stomach. We're going to show you strategies on how you can speculate on how far a trade can and will run while still limiting your downside. Okay, so that is a very powerful concept. And if you're not familiar with options, that's exactly what we teach. If you're just familiar with, and there are people in the group, they don't want to learn about options. It's a highly complex field. It's not just speculating on, I think this is going to go up, I think this is going to go down, I'm going to buy a call, I'm going to buy a put, I'm going to do a cash secured put. There are so many complexities to it. And think of it this way. Think of it not as just a bet on going up or down. Think of this almost as if you're walking through a field and the field has gold in certain spots. You want to find, instead of digging the entire field, which you'll never be able to do, you want to judge and you want to estimate where is the greatest probability that where I dig will be the gold. And that's what we're looking for. We're looking for a distribution, a probability distribution, to say that if this happens, I make this much money. If this doesn't happen, I lose this much money. Very, very rarely. Now, Mag 7 and QQQ5 don't have options, but the price on those was so cheap and cheerful that it felt like owning a call option on those without the theta decay. There's volatility decay, which works in a similar way, but I was very happy just owning those for the long run, because this was not a bet on one company, one stock. This was a bet on basically tech in America. And that has been a great trade for us to go from 6 approximately to 45 right now, even with the little blips in between. If you look at the return on the NASDAQ or on the Mag 7 during that time, the 5X ETF has actually returned more because of the compounding effect of the move here. So these, pardon me, these leverage ETFs are also path dependent. So if you get a sideways movement like this, they're going to underperform the underlying. But when you get a move like the one we've had, and I think there's more coming. Big earnings tonight, big earnings tomorrow, Apple, Amazon. When you get a move that's like a blow off top, and we're getting to that stage, when you get liquidity being pumped into the market, those 5X ETFs really do pay off. And there's only I'm only aware of 2 of them. I think there's TLT as well. These are all traded on London, but you can easily do the 3X ETF, which is TQQQ. We'll look at that as well. So the rules of the system, and there are only 3. Okay, you don't need any fancy moving averages. You don't need any kind of bands. You don't need any regression analysis. You don't need any of that stuff. You don't need a crossover. You don't need any of that. You just need to do 3 things. So thing number 1 is we've already done the work for you in the background here. And the system, we're training it so that when things change, when the market changes, that it changes with the market. So we're going to make things a little tighter, a little looser, depending on how the market goes here. So, I beg your pardon. This entry here on UUUU, you can see enter long. Rule number 1, look for an entry. Okay, that work has already been done for you. Rule number 2, this is where you need to put in a little bit of work. What I want to see is, and I've got the 20 period simple moving average on. You don't have to have it on. I use it as a guide for the following. When this entry comes, I want to see a break of a previous high that's above the 20-day simple moving average. Okay, so I'll say that again. On any long position, on any long entry, I want to take that entry when it breaks a previous high above the 20-day simple moving average. Same on the other side, on the short side, you want to see a break of the low. Okay. This 20-day simple moving average, why am I using that? It's just a comfort level for me because I'm trading a daily chart. If you're trading a 5-minute chart, you may want to use a 50 or a 200 period simple moving average. Whatever is comfortable for you. What we want to do is we're looking to see where we have support and resistance. Okay. This area you can see where if I were to take a trend line and start drawing this trend line going this way, zoom in for you a little bit there, you can see the general trend is to the upside. There's a very well-defined previous pivot high, a 3-bar pivot at this level here. So this takes place in April of 2025. We get this move up shortly after Liberation Day. There's news about the US trying to become more self-sufficient in the rare earth area, because most of the stuff that is used from the rare earth side of things, it comes from Africa or more likely from China. So the US says we don't want to be beholden to them. We want to start developing our own. MP is another company that benefited from this rare earth kind of push for self-sufficiency. So now this here, so let's look at the high of this bar here, which turns out to be $5.12. Our entry comes at $5.32. That's the close of the day, the high $5.54. So this is now a live trade. We've broken the previous well-defined previous pivot high. Okay, so let's take our trend line and we'll take it all the way across. Okay, so you can now see that we've clearly broken a previous pivot high. So rule number 1, we've got a long entry. Rule number 2, have we broken a previous pivot high? This is in case of a long trade. Short is opposite. Rule number 3, what is our strategy here? Are we just buying the commons, or are we looking at an option strategy? My favorite option strategy for most cases, and there's no one that fits, there's no one strategy that fits every situation, but if you had to ask my favorite, conservative trader here, I like call debit spreads here. And I like going out at least 60 days, more 90, 120. I want to see when earnings are happening. I shouldn't say never, I rarely sit through earnings because they are just so highly unpredictable. What I will do through earnings is perhaps buy just a simple call, wait for that earnings bump from the implied volatility spike, and be out before earnings are announced. If the implied volatility spikes the premiums to a point where I can continue staying in the trade while taking some profits off the table, I may do that. And again, there is no, if someone says this is the silver bullet, this will make you, I don't think there is such a thing. If there is, please let us know. We're happy to buy it from you. So going back to UU here. So here's our trade. And let's go back to our presentation. So we're assessing support and resistance. We've done. Decide on a strategy. That's where we're now. And when I say strategy, you need to also set your stop loss. So this is where we get into what's comfortable for you. What's comfortable for me is no more than 10% from my entry. So if we were to look at this entry at 530, my stop loss is going to be plotted right at around, say, 490 or so. Okay. getting this straight is always an issue. Now, for pardon me, for something like you, which is in a sector that is in favor, I may loosen that rule a little bit. And for a stock that's only $5 and change, I may loosen that rule a little bit. And if I'm looking at call options that are a 5 and 7 spread or a 7 and 10 spread, something like that, the rule, again, I don't like to violate it, but there are no two situations that are the same. You've got to make some judgment calls here. So generally 10% will get you to this level here. Now you can see as soon as we get in, we come back. And this is one of the keys to this system here, is that when we get this entry and when we use that 10% stop loss level, you will see trades that will test your patience. But have that patience. And this has been a theme for us throughout the year, that if we panicked here and got out because of this ugly reversal bar the next day, we would have missed a really good trade. If we had gotten out on this test of that stop loss level, we would have gotten out on a really good trade. I should clarify, it has to be a close below your stop loss level. If you're owning just the shares and you get a gap down, it's going to be problematic, which is why we generally tend to put on some kind of trade that has a protective component and or a risk-defined component from the beginning. Okay, so we come back, we test the stop loss level, and then we are off to the races. And you can see from 532, we've had very, very few chances. We've had very, very few times where this trade has caused us to sweat. We actually hit a high, in this case, around $27. So from 530 approximately to 27. So as long as the bars stay green, you're in that trade. Now today seems to be a day where the bar is red. This bar could change during the day, and I was just about to say it could change during the day, and it just did. So everything that I'm saying is on a close of the bar. If you're trading a 60-minute chart, 5-minute chart, and we have that for our day traders, we've designed a system that's specifically geared to people that are trading on a shorter time frame, hourly, 5 minutes, 15 minutes. And when you get this, you will actually get both systems. You get the intraday and you get the interday. So you get the velocity swing trader and you get the velocity day trader. They both work really well, and the one is just more sensitive to price movements than the other. You could certainly use the day trader on a longer chart. You will get more entries and exits, but for me, the comfort level is I like the day trader. I like the swing trader because that is my style, and the system I've designed is suited for that style. Okay, so bar colors can change during the day, so you've got to wait till the close of the bar. So in this case, it would be at 4 p.m. today. So let's see where we go with that bar. So if you had been in this trade from $5.30 to where we are currently, about $20, even, the high was 27, but you didn't take your profits along the way. How many of those trades do you think you would need to have a really good year? Now, I would argue not many. And Peter Lynch is famous for saying this, that you only need a certain, I think the number was fewer than 10 great trades in your lifetime to become really rich in the markets, from the markets. So we're not holding these things. We're not married to them. We're not saying that you is the conviction choice. Although for me, it's a bit of for me, it's best to breed in the rare earth space. MP is close behind. Not married to it. So if there's an exit that flashes on velocity, I'm out of that trade. Okay, I'm treating this is my trading account. My long-term retirement account has a different strategy. So I'm looking again at secular trends. I'm looking at the overall markets. I don't know if Nvidia is going to do well, or Microsoft is going to do well, or Apple, Tesla, but I know that particular basket of the Mag 7, if the market's going higher, I know that, or in my opinion, those leaders are going to lead it higher. So if you compare what's happened in the NASDAQ versus the Mag 7 has outperformed the NASDAQ significantly from April 8th when we had that, April 7th when we had the low. NASDAQ's done really well, but the Mag 7 has done extremely well. And recently, you're seeing Nvidia flying, you're seeing Tesla going, you're seeing Apple hitting all-time highs, Google now starting to pick up steam. And that for me is also easier to protect because I can get options on the Mag 7. I can get options on lots of ETFs that track the Mag 7. The bar just turned red, by the way, on U. So you can see the price of around $20 is where we're going to have a determination on whether we have a close or we have an exit today or not. So we will follow that. But what I wanted to show you was you get these dips along the way. But if you're taking profits, let's say you took your first set of profits here, and Jeff and his team have done a wonderful job in programming some predetermined profit levels. You see the R3. But when a trade does this, when you get to R5 and above, there's nothing above there. So you now have to make a decision on what you want to do when you get to the stage here. You got in at 5:30. This close here is at 8:20. So $3, about 60%. You're up on that trade in a very short amount of time. And again, this works the same if you have the day trader. If this is let's say it's 30 bars. I'm just eyeballing it here. 30 bars on a 5-minute chart is about 3 hours, a little bit less than 3 hours. So you would have the same kind of action. The move wouldn't be as significant, but doing this technical analysis on a shorter time frame, you're certainly going to have more chop. And for me, that chop is not acceptable. It's just not comfortable for the way that I trade. I want something consistent. I want to catch, and a very, very smart trader pointed this out to me. He said, day traders will get in here at 7 or 8:20, get out at, what is it here, 9:16, 94 cents approximately, 96 cents, and think they're geniuses because they did that in a day, and that's a great return. But what they're missing is this entire move from $8 and change up to 27. That's the move I want to capture. I'm not interested in the 30 cents here, 40 cents there. I'm looking for, and I'm designing my system with the intent of finding big moves like this. If we look at just even the market charts here, so there's the NASDAQ, and there's that move that we capture. Okay, again, let's look at this in detail. So here comes our entry, and remember the rule. If we put on the 20-day simple moving average, it's right around here. So we want to see, you don't even need the 20-day simple moving average. Okay, you want to see a break of a previous high that's clearly well defined. So there's the previous high. On this move here, we don't have a break of that high. So let's draw our trend line here, and let's say it's right there. Okay. On the next bar, on the 12th of May, by the way, this turned out to be a great VIX trade for us. We had bought VIX put options here on the 9th of May, and that just turned out to be a blockbuster here, and we actually cashed out on the Monday, the following Monday, when we had that big move up, and bought those options for 35 cents, ended up selling for 155, the entire position. And that also contributed to the big gains this year. So this was a spec play on trade talks going favorably, and it wasn't that we think this is going to be slow and steady. This was, looking for an asymmetric trade. If we're paying 35 cents for this option, can we get 70 back for it? Can we get $1 back for it? If we lose, we know it's 35 cents. We've defined our loss from the time that we got into the trade. This was not predicted. You can't predict this stuff, but you can accept a gift when the market gives you one. And this was a gift. We took that. So now what do? You get this gap up. Do you take this trade? The answer is it depends. You can and set your loss again at 10%, or in the case of ETFs, I actually like to tighten that a little bit. I like to keep it at 5%. So if we were to take this trade where the closing price is 507, 5% would take us down to about 475 or so. Take our trend line, and let's say 475 would be right around here, if I'm looking at this correctly. Okay. So 486, 482. There you go, 475 approximately. So we take this trade here, knowing our stop loss is down here. This does not, the distance to the stop loss looks significant, but I know it's only 5%. And that is within a risk tolerance range for me. 5% on a major ETF is just fine. So here's the trade. And again, we go up a little bit, but remember what I said. This will test your patience a little bit, but unless it hits your stop loss, you don't have a job to do. The stock has a job to do. It has to go up. Your job comes into play when it gets close to this line here or closes below this line here. Okay, so let's define our roles in this field here. Pardon me, this leg is just on the desk, it's just in an awkward spot. The role of the stock on a long position is for it to go up. It doesn't care what you think or you want to do, but that's its job. Your job is to sit as the monitor to say, is this going to close below my stop loss level? If it is, I need to take action. Is this getting close to my stop loss level? If it is, I need to take action. In the meantime, you're doing whatever you're doing. You're having lunch, you're spending time with your family, you're on vacation, you're not doing anything, and you can set alerts for all of this stuff so that if it starts to get close, you turn on your laptop, you go to your phone now, everything you can do on your phone now, and you say, what do I want to do with this? And what you want to do with it, if it closes below, unless there's a very compelling reason for you to stay in that trade, and it has to be very compelling. And compelling doesn't mean I feel like it's going to bounce. There has to be a very compelling reason. There's a big announcement that's due that you want to wait for, or you've already taken profits on the trade and you don't mind if it closes a little bit lower. In most cases, when it goes below here, I'm closing out that trade. That is a rule. That is a rule that I do not want to violate unless I can convince myself and convince anyone who's asking me. So if Vince asks me, hey, why'd you stay in that trade? This is my reason. And he'll say, not a good reason. Or he'll say, yeah, it makes sense. I'll do the same for him. And we had a disagreement on how to manage an Uber trade. So this Uber trade here, and this was a re-entry. So the most recent Uber trade was on this one here, I believe the 6th of October. Let's go back to our, so there's the Uber trade on the 6th of October. That was a re-entry. So I was combining the velocity system here with Vince's Victory 3.0, which is fantastic. And the price was at 100. We paid 165 for a 105, 110 call debit spread. That's the CDS for January. It closed below my stop loss level and took the loss on it, sold that position for $1.10. Vince said no, he's going to stay in that position because he feels that there's going to be a bounce back. So I'm already out. He's as far as I know, he's still in that position. So we'll see who's right. But I didn't like this action here. So when you're, in addition to your rules, and now we didn't have the benefit of these bars then, but I didn't like how this was happening. Lower highs, and if we look here, lower lows. Okay, we're almost forming a bit of a wedge. Now, he may be right, it may bounce. Earnings are coming up shortly. It may bounce, and if it bounces for him, I'd be very, very happy for him because he has the courage to stay in the trade. I followed the rules, took the loss, I'm on to the next trade. So unless there's a very compelling reason, you want to be out of that trade when stop loss hits. Now, going to that, talking about the issue of we want to keep our losses small, but when we have our gains, we want to let our gains run. Okay. This is a good chart in which we had a little bit of back and forth. So here comes our long on the 11th of Feb. Okay. Now, if I look to my left, we could say this was a clearly defined pivot high above the 20-day simple moving average. So would we take that trade? Let's see. So close here, 76 and change. The 20-day simple moving average is at 69. I'm comfortable with this. So in this case, what I'm going to do is take this trade, but I'm going to use the 20-day simple moving average as my stop loss level. So that stop loss looks like it gets hit, if I zoom in, right there at 73 and change. So entry, 76 and change, exit 73 and change. Okay. Another long here. Now this one is not a valid long because we haven't broken these highs here. So we stay out of this trade. On the short, what's the distance that we have to the 20-day simple moving average? So on this short here, and again, we're also assessing this with the market. The market's pretty strong. We're not going to take this short. I'm sorry. In this case, the market is actually quite weak. This was Liberation Day follow-up. So here comes our short. We do have a little bit more downward action, but then we do get closed out on this. This was a very violent time in the market. So everything was going to be overpriced, especially the protective side of things, which is the put options. But let's say you did get in here. What is your loss here? 65, and you're out at, where are we here? 72. So it's $7 loss. We've got a $3 loss here. And then when you get this long here, and I'm going to use this colored green bar as my previous pivot high. So I don't take this trade until I break this high of 77.58. So break that high of 77.58 on this day here on the 24th of April. And now this one was a no sweat trade. It didn't come back and test anything. It just kind of went up from there. From 78, we hit a high very quickly of 93. We do pull back a little bit. We hit another high, 97. We come back a little bit. We hit another high at 101. So we lost the $3 on that trade. We lost 6 here, but now we've gone from this trade here at 73 on the close. Is it 73 on the close? Let's just make sure. Close 78. I'm sorry. To where we currently are, which is 96, and we did hit a high of 101. I'm taking profits along the way. So that is the message here, is that you can do this. You can make it as mechanical, or we've tried to make this as mechanical as possible so that emotions of fear and greed don't interfere with your trade plan. And you've got to have a trade plan, not just for your overall account, but for each trade. When are you getting in? When are you getting out? And when are you taking profits? Okay. On that note, I will leave it up to Jeff to describe or to tell you how you can get this. And we're always here. You don't need to be a member. If you have questions, you can always ask Jeff, or you can always email us at info@tradingwins.com.
We do have a question for you, though, Rahul.
Go ahead.
Taran wants to verify that the line on your charts is the 20 SMA.
It is the 20 SMA. If I hover above it, Jeff, you can see that closed 20 simple.
Yep. He also says, in that case, the 20 SMA remains the most powerful trading tool in all of technical analysis. So
I think Vince would agree with that because he's been using the 20-day simple moving average. So, and again, he's taught me a lot about technical analysis. And when he does his presentations, it is such a calm and measured approach to things. But the 20-day simple moving average, I don't know if it's the best one for each stock. I think, Jeff, who is it? Oscar Carboni? That talks about how different moving averages or different charts obey different moving averages depending on the stock. And that's such an interesting concept.
Yeah, but the 20 is very, very popular.
The 20 is very, very popular. And the reason price obeys the 20 is because a lot of traders are watching the 20.
It's a self-fulfilling prophecy, right?
It's a self-fulfilling prophecy. It certainly is. Yeah. I like the 50. I like the 200 for longer.
It was Steve that said everybody looks at the 50. Everybody looks at the 200.
Everybody's looking at the 50.
Yeah.
But what we've done with Velocity, what you and your team have done, and I am so impressed by what you've done with it, is we're not just taking one moving average. We're using something that is combining a few different factors and trying to get you the best entries while getting you entries where if it doesn't work, it's a small loss. But when it does work, boy, you see a lot of nice green lines on there.
Well, and the other thing that I really like about this, and I hammer this every time, but I like the fact that you initially take profits off and very rapidly. You don't wait very long, and so I think your rule is you take a third off, and then you let the rest ride.
Yeah.
So it's a great way to do it.
Yeah, and the results from this year kind of prove that the system at least has worked this year. Now, if we go back and test it, it depends on the market. If you're looking at a 2022 market, you had a really great when I say great, I mean it wasn't great for people that are long, but a down year that was very consistent. It was sort of stair steps down. You've heard that old adage of you take the stairs up but the elevator down, but that year we had nice stair steps down. But this year, as we're getting closer to the end of the year, it's almost Halloween now. I think there's another leg higher that's coming, and I've been saying that since the beginning of the summer. And we've been long on the market since.
Do you think it started already? Because we've had a couple of pretty bullish days.
Yeah, I think if you look at charts of NVIDIA and some of the more popular names, so NVIDIA looks like, now that I wouldn't call this a blow-off top, but boy, it's close. So NVIDIA is one example. Palantir is another. And if you're not long in this market, because you've been hearing it's a bubble, these bubbles can keep getting inflated for a very, very long time. And if you're waiting for a pullback, you could be waiting a while. People were saying this is a bubble here at 140 and then here at 185. So yes, you get selling, that happens, but then you get right back in and you're making money on this trade on to the upside here. Now, this is where I would maybe combine the day trader and the swing trader systems, because you don't have an entry on Palantir. The last entry on Palantir is when, Jeff?
I don't see it.
Let me see. Okay, expert advisor, Velocity Daily. I've got it on.
Yeah, it's all the way. It's going to be it's.
Oh, there it is. There it is.
Yeah, I'm like, keep going.
Yeah. So May of 2023 at a price of approximately $10, call it. So you would have been in this trade from $10, your last, whatever you're holding in this trade, from $10 all the way to $200. You've got a 20 bagger from just following the green lines.
All right, last question. Are you doing anything for Halloween? Do you have any kids that are going to go around and cause problems?
Kids are now, I think so my daughter really likes doing makeup and stuff, so she'll do that. My son just thinks this is beneath him at his age. And
My kids are good for that age too.
we usually get 5 to 10 kids here at the house, so it'll be good. I got pumpkins outside. I'm excited.
You're ready. All right, cool.
Yeah.
Uh,
And so
let me
big
go.
before I go, big earnings tonight. We've got Microsoft, which is as good as Metastock. We've got Microsoft and Meta tonight, then we've got Apple and Amazon tomorrow.
We're the original Meta stock.
You certainly are. There's no other to me.
All right, very cool. Thank you, Rahul. Appreciate it. You should be
Jeff,
able to see my screen now.
it's always a pleasure. Thank you so much for having this stuff invigorates me. I love talking about this. If anyone has questions, you can reach out to Jeff or reach out to us directly.
I love how you keep the spreadsheet. You've been showing it for the whole time.
Yeah, you've been with us. I mean, you've been following this since May.
Yeah.
And like I said, every single trade that we put on here is all tracked and time-stamped through the channel here.
Cool. All right.
Yeah.
I'm taking charge. Thank you, Rahul. I appreciate it.
Thank you so much for having me on, Jeff.
I love the fact. I'm also, when you get the add-on, you get access to the room. You get the picks on a daily basis, all that kind of stuff. Want to talk a little bit about the add-on, the special we're running with it as part of the webinar today, and of course, how to get it. So, of course, every time we release an add-on, I think one of the things, if you're not familiar with Metastock, one of the things that it does best, it does a lot of things. Like it's a toolbox, right? But scanning, the ability to go through and identify those stocks that have an actionable opportunity is one of the things. And a lot of the people that we kind of work with agree that ability to find those stocks when they have the opportunity, when it's actionable. So I think one of the best things that we do. It's something that I'm actually running a scan right now on this other computer right here. I just absolutely love it. So of course you're going to get the scans. You can do the scans on the daily or the intraday. Both of those systems, as Rahul mentioned, are included. Let's go ahead and go to the next slide. Has the expert advisor, which is going to paint those signals on the chart for you. It's also, and this is something that I like to kind of talk about, when you get those signals, so let's say you run a scan, not only is it going to kind of give you the signal on the chart, so it's very, very visible, but you can see right here it has an expert commentary that is included. Right now it's kind of saying, hey, this is a new long plus signal, which is kind of the most powerful signal that it will generate, gives you some advice on how to do it, gives you some advice on what your stop losses are, and actually kind of puts those on the chart for you as well. You can kind of see where these kind of initial levels are drawn as well. So it does give you the momentum-based stop loss lines, gives you clean intraday charting templates. Very, very easy to kind of go through, visually see what you're going to do. So very, very cool. The other thing that Rahul talked a little bit about, but really didn't kind of go into a lot of detail, is a room that he's part of, and that would be the Trading Winds room. You can go up to tradingwinds.com. You can sign up for membership in their room, and it's about $97 a month, I believe, or about $1,200 a year, $1,164 according to the math that I did. That includes like your daily trading ideas, live weekly training sessions, 3 of them, on-demand technical analysis training, and option trading ideas. When you buy the Velocity add-on, not only are you going to get the add-on, which will allow you to kind of implement it and look at it and see it on Metastock, you'll get a free year of access to the Trading Winds membership service. So all of that stuff. So the normal cost on this is $19.97. That year of membership would be $11.64. We did record a boot camp that's included as part of it. And if you need access to Metastock, maybe you haven't heard about Metastock yet. If you need access to Metastock, we will include a free trial. Metastock, if you haven't heard about it, it's been rated the best software in its price category. It's only won that award now for like 32 years in a row, but it'll help you do the scanning. It's the engine that kind of powers everything. It's the engine that powers the expert advisor and the scanner. So we'll give you a free trial with that. We'll back it with a money back guarantee, so you can try it. If you don't like it, if you don't think it's helpful, you can just get a refund. The price that we're doing as part of the promotion today is $9.97. We're giving you that money back guarantee. Great risk reward. I wish I could get a money back guarantee on all of my trades. To do this, though, you can go to metastock.com/velocity. That's a great way to do it. If you have questions, if you have some questions that you want to get answered, we're happy to talk to you. You can call us in the US or Canada at 800-882-3040. You can always chat online with us from anywhere in the world, metastock.com/saleschat. Give this a go. Again, we'll back it with a money back guarantee. Been a very popular add-on. Very, very clear. It comes with the year of membership. Metastock.com/velocity. Just checking to see if we have any other questions. I don't see any, but one might be hidden right behind my camera. Let me just check. Okay. Nope. Thanks for coming. If you like today's session, I did. Make sure to like and subscribe if you're watching us on YouTube. Stay healthy. Stay well. Give this a go. I'll see you at the next one.